Hello, I'm Tom Gosling, Executive Fellow at the European Corporate Governance Institute, and I'm here with Edward Mason, Head of Engagement from Generation Investment Management, to discuss our series, Does Sustainable Investing Work? Edward, thanks so much for joining me today. But before we get into the discussion, perhaps you could tell us a bit about Generation and your role in the organisation.
Yes, of course. So Generation is a sustainable investment manager. We've been going for 20 years now. We celebrated our 20th anniversary this year. We invest across public and private markets. And my role is head of engagement. So I sit within our listed equity business, and I work with our analysts on engagement with portfolio companies on sustainability issues. But Generation also does a number of activities at a system level.
Mhm.
So we played a role in setting up the Net Zero Asset Managers Initiative. We're also very involved in the Glasgow Financial Alliance for Net Zero. So I also get involved in these kinds of system level initiatives that Generation is involved in.
And we're going to come back to how Generation approaches a lot of these issues. But I'd like to start with your reactions to the series of articles we put together. And we'll put a link to the original articles and my discussion with my co-author, Harald Walkate, in the show notes, which gives more on this. But in brief, I'll just summarize the analogy we used of the 3 stages in a rocket required to put a satellite into orbit. And in stage 1, the investors' actions must have some effect on the companies in which they invest in order to have impact. So, for example, divesting from a dirty company might increase its cost of capital. In stage 2, managers at the company then need to respond to that effect and change what the company does so as to create an impact in the real economy. So, continuing the example, they respond to the increased cost of capital by investing less, and so fewer dirty goods are produced. And then in stage 3, to get the satellite into orbit, this impact must persist and must not be unwound by the responses of competitors and other actors. So, for example, we don't have other competitors stepping in to increase their production of the dirty goods just to offset the reduction at the first company. And when we reviewed the academic evidence, this suggested that conventional sustainable investing techniques struggle to make it through all 3 phases, which led us to conclude that sustainable investors wanted to have impact, perhaps needed to have more modest goals and focus less on achieving outcomes directly and more on influencing the circumstances in which good outcomes can occur. So in terms of your reactions to our work, let's start with the positives. What did we get right?
Always good to start with the positives.
Yeah.
Look, I mean, I think it's great to bring academic rigor to these issues, and I think the kind of examination by academics of what practitioners are doing and what works and what doesn't is really important. So I think the kind of the skepticism, the academic framework that you brought is helpful in itself. I thought your comments on divestment were pretty on point. I think a lot can get loaded onto divestment as a kind of tool of sustainable investing. And I think somehow sometimes there can be an expectation that if investors stop investing in the equity of a business, that business activity will cease. So I think you're absolutely right to kind of question that impact. I found your comments on engagement kind of particularly interesting because obviously that's the main thing that I'm involved in. And I think what I liked there was your comment that engagement needs to be paired with a kind of deep understanding of the company and how it creates value. So I very much agree with that. And I think one of your biggest conclusions is that kind of sustainable investing by itself is not enough. It needs to be paired with policy change. And we absolutely agree with that at Generation. And I quite liked your observation there that if investors are serious about sustainability impact and public policy work, they actually need to kind of step up their activities here and kind of increase the intensity and do it with more seriousness. So yeah, so there was a lot that I agreed with, and I think just kind of bringing academic rigor to bear is important.
Okay, so what did we get wrong?
Yeah, so there were definitely a few things that I disagreed with, and I think we can explore some of those kind of through the interview as well.
Hmm.
I think you underestimate the power of engagement. I mean, I've been a practitioner of engagement for 15 years now, and I think the idea that engagement can only be restricted to things that are kind of low cost for the company or a kind of win-win. I mean, there's something in what you say, but I think it definitely needs unpicking. And
Hmm.
I mean, some of the engagement I did kind of early in my career in sustainable investment was kind of not at Generation. It was at an asset owner, the Church Commissioners for England, and we were very much involved in the early engagement with the oil and gas industry, sort of, over 10 years ago on climate change. And I think that engagement had quite a significant impact on the industry. I think if you look at things like the likes of BP and Shell making net zero commitments, increasing the low carbon business units in their companies. Uh, I think these companies needed to know that sort of investors supported their going on a journey on climate change.
Mm.
They're making commitments. They're kind of embracing net zero as kind of part of the kind of long-term trajectory of the business. So I think that's played a significant
Mm.
part in the kind of development of the oil and gas industry in recent years. Now, clearly, that's not sufficient. It's not sufficient to kind
Mm.
of to limit warming to 1.5
Mm.
degrees.
Mm.
My old employer, the Church Commissioners, have now divested
Mm.
from these companies because they think they kind of got as far with them
Mm.
as they could. So, but I think these are impacts. But again, there are limitations, and a
Mm.
lot of the early investors that kind of pushed the engagement tool hard have recognized that. I could give other examples, but I
Mm.
think this is the main
Mm.
area where I would disagree with you
Mm.
is on the power of engagement.
Okay. And then were there areas that you just think are really important that we just missed and didn't cover in our analysis at all?
I think I think there probably were, and maybe I kind of touched on it in my previous answer because I think a lot of what the most ambitious engagement and sustainable investment activities try to do is they try and change norms. So
Mm.
norms of kind of investor behavior, company behavior, how
Mm.
investors and companies think. And I think it's quite hard to measure that and to
Mm.
measure the impact of that. But at the same time, we all
Mm.
know when we see it
Mm.
over time, when kind of norms have changed and norms of behavior have changed, and
Mm.
you know that can create space for policymakers to
Yeah.
do things that they kind of hadn't done before. So I think that's one thing that I was conscious
Mm.
that
Mm.
you hadn't
Yeah.
touched upon. If you look at something like science-based target setting on climate change, I mean, this has become kind of normal business practice now. I mean, if you look at say our portfolio of companies in our global equity strategy, which invests in kind of large companies around the world, over 70% of our portfolio now is
Mm.
covered by companies participating in the Science-Based Targets
Mm.
Initiative. That's a pretty remarkable new norm. Um, and I think these norms matter because we're on a journey of understanding how our economy relates to sustainability.
Mm.
We do exist on a finite planet. There are boundaries to what we can do on this planet in terms of greenhouse gases or kind of ecosystem services. So I think this is the kind of bigger shift that we're involved in, is kind of reconciling economic activity
Mm.
with the kind of environmental and social limits of our planet and societies. And I think again that's a norm shift, and
Yeah.
these norm shifts are important. And then I think um, the final thing is I mean, for me personally, we would say that ambition is really important, and
Mm.
ambition helps solve the world's big problems, and the world faces very big problems on sustainability. I mean, huge problems, and problems that are really urgent. So I think the one thing that kind of worries me about the recommendations that you make, the conclusions you come to, is it almost kind of legitimizes low ambition, says there's nothing we can do. And you know, we would say that that's not the appropriate response to the magnitude of the sustainability challenges that the world faces, and that the investment community faces.
I think that provides a great link to now turning to talk about how you think about sustainable investing at Generation, because actually, to your point, it seems to me that you're all about trying to have an impact. And to quote from your website, you know, we are a mission-led firm. We seek to deliver long-term, attractive, risk-adjusted investment returns and positive impact, and to advocate for the adoption of sustainable investing by the wider market. So, I mean, that is a much more impact-oriented stance than many asset managers. And I'd like to unpick it a bit. First of all, how do you think about combining returns and impact? And do you see a trade-off between the two? And when you have institutional investors buying into your core strategies, are they doing it on a standard risk-return basis or as part of an impact mandate?
Impact is really important to us, as you've kind of read out from our vision and mission on the website. It's what drives us. It's what kind of holds us together as a culture. And it's kind of why clients partner with us. Now, what I would say is that we are not concessionary in any of our strategies. So all of our strategies seek to deliver strong investment returns, and we've been at this, as I said, for 20 years now. Our oldest strategy, the global equity strategy, has a 19-year plus track record now. We were set up to prove the business case for sustainable investing by showing that it works financially. And we think we've done that over the 20 years we've been in existence in both private and public markets. Obviously the usual sort of caveats around sort of past performance and future performance, but the landscape has moved on hugely in those 20 years, and I think the case that kind of sustainable investing is, as we would say, the best form of investing is kind of has been sort of started to be demonstrated. Now, our clients are looking for strong investment returns. Our clients are some of the biggest foundations in the world, some of the biggest pension funds in the world, some of the biggest sovereign investors. These are all clients with fiduciary duties to their beneficiaries, and we have fiduciary duties as well. We take this incredibly seriously, so there isn't compromise on investment returns. We seek to deliver investment returns with impact.
So, just to follow up on that, I mean, perhaps a simplistic view I have is that for an investment to have impact, it must be enabling something that wouldn't have happened otherwise. And projects that deliver market returns generally shouldn't have a problem getting funded. And so this takes us into the tricky area of additionality. So if we look at your core strategies, what is it that you view as creating the additional impact?
No, and I think that's absolutely the right question to ask, but I think you need to frame the question correctly as well. So capital allocation is one lever of impact, and that's what you're talking about here. But so you're ignoring the engagement impact, which is actually and that's the primary way in which you can deliver impact in public markets. You're not delivering fresh capital to businesses by and large, trading secondary securities. So the impact that you can have is how you own the companies and how you engage with them. So I think it's important kind of not to forget about that. Then when it comes to private markets, yes, you are delivering primary capital, and I think in the kind of purest form of impact investment, then yeah, that is exactly what you are doing. Is you are funding things that may struggle to get off the ground or to be funded otherwise. And I think we're going to come to our Just Climate business, which is the newest strategy, newest business that we've set up, because that is kind of the most impact focus strategy business that we operate. But if you look at impact in private markets more generally, I mean, what we have, say, in our growth equity strategy is a focus on particular areas of impact. So we look at people health, planetary health, and financial inclusion. So there's kind of deep expertise in these areas and how businesses can deliver impact on these areas. We look at kind of trends in the industries, roadmaps for where these industries need to go. We back companies that are kind of delivering solutions for these societal challenges. And then the growth equity team kind of will select a metric to measure for the impact that it is achieving. They'll also kind of work with that business as they partner with it on growing that impact. So, there's also a stewardship role and a partnership role in private equity. You've often got a seat on the board. You can offer tools to a company to kind of increase its measurement of environmental and social impact. So it's the combination there of capital allocation and engagement.
And you are the head of engagement, and you've highlighted engagement as a critical part of the approach to generating that impact. And sometimes when you read material that's put out by NGO type people, the view of stewardship seems to involve investors sort of forcefully getting nasty companies and recalcitrant CEOs to do things that they don't really want to do. You describe it in your material in a much more collaborative and supportive way. So how do you approach that engagement as part of the approach to sustainability?
Yeah. I mean, I came into the world of investment actually from the British Foreign Service. I was in the British Foreign Office. I was a diplomat. That's where I started out my career. And ultimately, most of diplomacy is about influencing, and it's about using different tools for influencing, and it's about understanding, what your levers are, and kind of what your strongest suit is for the situation. So I do think that engagement is like that as well. So there are different kinds of kind of attributes you can bring to the table in engagement. One might be the sheer weight of your financial investment. One might be your kind of moral authority, which is kind of part of what I was drawing on at the Church Commissioners. Another could be, say, the expertise on sustainability that we bring when we engage with companies. So I do think there are different kinds of engagement, and there can be a role for that sort of hard-edged engagement as well, as I kind of talked about with the work that I used to be involved in with Exxon. But you're quite right. A generation, typically, we're doing a different kind of engagement, and there are a few things that I would pull out. So engagement is always kind of a partnership between the analyst and the engagement team. So myself and my colleagues. So it's absolutely critical, as you brought out in your materials, that engagement is done on the basis of a real understanding of the company, how it operates, how it creates value, how it thinks. And so it needs to be infused with this kind of real understanding of the company. So we do that. I think engagement is also relational. I mean, ultimately, it's about a meeting between people. So how that relationship is conducted, and how the relationship takes into account the kind of the long run, how the relationship can play out, how progress can be achieved together. Is important. And I think that's another thing that I would draw out about the engagement that we do here at Generation, is that it can take quite a long time. This is not it's not about kind of quick wins or hitting easy milestones. I think, when we engage at our best, it's fundamentally about making good companies better, and even making good companies like real exemplars in their industry on sustainability. And that's a process. It's a process that takes time. I could maybe give an example if that
Yeah,
would
for
be
sure.
helpful.
Yeah.
For example, we invest a lot in the semiconductor industry, and one of the companies I've done quite a lot of engagement with in my time here is it's a provider of capital goods to the semiconductor industry. So, I joined Generation in 2020. At that time, we'd started to have a conversation with them about climate change to try and sort of enthuse them more about their role on climate change in the semiconductor industry. They committed to the Science-Based Targets Initiative. They started to make sustainability a theme when they were contributing to the agenda of industry conferences. They've now actually got a validated science-based target with the Science-Based Targets Initiative. But what has been, I think, the most exciting thing through this engagement is that, we always press companies to look at their scope 3 emissions. So this is their sort of full value chain emissions, as well as scope 1 and 2 that are more directly under their control. And that had a real impact on this company when they did the analysis, because they saw that essentially they're leveraged to how their equipment gets used where semiconductors are made. And as we know, that happens largely in Asia, in principally Taiwan and South Korea, which are on pretty dirty grids with constraints. So essentially, that has kind of brought home to this company that if they're to make progress on their emissions, they need to look at the whole system in which they play in and try and contribute to an increased uptake in renewable power in markets where their products are used. So, we like to take companies on a journey to being system positive, where they are thinking about the system in which they operate and how they play in that.
That's a really interesting example. And you've mentioned Just Climate already, and I know it's a separate business unit, but I am interested in it because it seems quite close to what we talk about in our articles in terms of focus on private markets, venture, blended finance, where the impact is going to be greatest. What role does Just Climate play in your offer? What's the client offer, and how do you balance returns and impact here? Presumably, it's more of an impact mandate.
It is, but it is with market rate returns as well. So as I say, it's
Okay,
not
so it's still not concessionary.
Yeah, exactly. So essentially, this business was born out of a need that we saw, that not enough capital is going to critical areas of the transition to net zero. So there are some areas of the transition that are not finding it hard to raise capital now. And so if you look at renewables deployment in developed markets, for example, or electric vehicle production, these are not areas that are kind of short of capital. But there are so many areas of the transition that need to be scaled up, where solutions need to be found, that are just not getting anything like the capital that they need. And you can see this in reports from the International Energy Agency every year. And these are things like the hard to abate sectors. So that could be steel, could be cement, could be aviation. It's also things that are happening well in developed markets, but aren't happening well in emerging markets and developing countries. And that includes renewables deployment, which is not going at the pace needed in many emerging markets and developing countries. So Just Climate was born out of a need. And essentially what they try to do is to maximize the avoided emissions from the investments that they make. And the team is incentivized on that. So, their carry is dependent on their achieving their emissions reduction goals. So there's a compensation linkage there to kind of to show that this is absolutely intrinsic to the mission of the business. So the early investments they've been made have been in areas like green steel, for example. I mean, this is in the public domain. H2 Green Steel, a remarkable story in northern Sweden of steel being made using green hydrogen produced by renewable energy, which is available in that part of Sweden. So this is about creating new industries that we need for the transition, where the technology is proven, but it needs to be scaled up. So it's much more, it's more cutting edge. It's led by impact, but it's impact as a driver of profitability, because these are solutions that the world needs. And so backing these businesses early, we think makes good business sense. But there are technologies that the team sees that where the impact is there, but unfortunately the economics don't work at the moment. And those are kind of deals and opportunities that they do have to leave on the table, because they're not suitable for a business that is committed to making market rate returns for investors, because that's its proposition, and that's how we get the capital of kind of some of the world's biggest investors kind of backing a strategy like this.
So my final question comes on to one of the tools that we haven't discussed quite so much, which is influencing the system. I mean, you've got quite a specialized investment proposition that probably enables you to align more with impact, that in ways it isn't available to all investors, for example, broadly diversified investors or index funds. But policy advocacy and system influence is available to everybody, and certainly policy advocacy and the related area of lobbying activity in investee firms is definitely getting increased focus from asset owner communities, and I know it's an area you're in active in at Generation. What have you learned about what does and doesn't work here, and what is realistic to expect from the investor community?
I mean, first of all, I would emphasize that everyone can practice elements of sustainable investing. So, saying you need to have a diversified portfolio, doesn't mean that you can't practice sustainable investing. Being an index investor doesn't mean that you can't do good stewardship and so on. So no one's off the hook on this. In terms of public policy work, I mean, this is a developing area of investor practice. I mean, it's not brand new. I mean, it's happened the whole time, the whole sort of 15 years that I've been involved in sustainable investing. A lot of it is done by industry associations, and they've scaled up their work in this area. So this could be the regional investor networks on climate change, like the Institutional Investors Group on climate change in Europe. The Principles for Responsible Investment has kind of devoted increasing resources to policy and has a good global footprint there. And we can definitely point to results. So in the way that you can point to the power of engagement with companies, there are more and more examples where you can point to the power of investors getting involved in public policy engagement as well. And one of the most powerful that I remember actually is from my earlier days, actually, because I know now the EU is looking at its 2040 emissions reduction target, and that will be a task for the kind of new commission to finalize soon. But I remember when the EU and the Commission were kind of looking at the 2030 emissions reduction target for the EU. As I say, this was in the early days, but in those days, the IIGCC, the Institutional Investors Group on Climate Change, came in with an ask from European investors with a blue chip membership of asset owners and asset managers, saying we as investors want ambition. and I'm trying to remember, sorry, I haven't got the exact details. So I think the choice was between like a 40% emissions reduction target or 35. It was something like that. And some European heavy industry was pushing for the lower target. But then we had investors coming in saying, no, we want this. We want you to go for the higher target. And we heard from the Commission that was really impactful to hear that kind of, the private sector actually wanted to see ambition. And it's not just kind of, some of the businesses that maybe stood to lose from ambition that had a voice in this, but kind of investors with an interest in the health of the whole economy in the long term wanted more. But I think we're just starting to explore the power of this. I think investors probably need to resource it more. We're starting to see some leading investors do that. We need to continue to empower our industry associations. I think we need to involve our principals as well. Something our CEOs talk about. That's something that we're increasingly doing here as well, because ultimately, with any kind of influencing, you have to do it like it matters, right? There's no point doing it half.
Absolutely.
People won't take you seriously, and that matters in corporate engagement, which is why we back it up with voting if we're not getting a response. And I think the way you do it seriously in public policy terms is you involve your senior people. I mean, that's what investors do when their kind of vital interests are at stake, and sustainability is our vital interest. I think it's great to see you thinking about it and thinking about the role of impact investment as well, because what we need to do is we need to find the tools that work, but we also need to maintain continued ambition, continued commitment to innovation, because these problems are not going away. They're getting bigger, and as a society, we need to solve them, and investors need to play their part in that. We can't do it alone, but we're crucial actors.
Edward, thanks so much for taking the time, and I really appreciate the contrary views that you've brought into this debate, because the purpose of this project has been to really surface some of these difficult questions to find the best way forward. So I've really enjoyed the discussion. Thank you so much.
I've enjoyed it as well. Thank you for having me, and thanks for the work you do.